Wall Street volatility, mixed earnings and trade war uncertainty. In the world of finance, uncertainty reigns supreme as Wall Street finds itself caught between a rock and a hard place, wavering amid mixed corporate earnings reports and sliding crude oil prices. With a critical trade deadline looming, investors are left holding their breath, unsure of what the future holds. But here's where it gets controversial. While some see opportunity in chaos, others fear the ripple effects of prolonged geopolitical tensions. Are we witnessing the calm before the storm or just another chapter in an ongoing saga? Let's dive deeper into this complex landscape. On July 22, New York saw its financial markets grappling with volatility. The S&P 500 dipped slightly, weighed down by sluggish tech stocks, which dragged the Nasdaq further into negative territory. Meanwhile, the Dow Jones Industrial Average managed to cling to marginal gains. This uneven performance reflects the broader unease gripping global markets as companies navigate uncharted waters shaped by shifting trade policies and economic headwinds. One key factor fueling investor anxiety is the lack of clarity surrounding impending tariffs. As Washington barrels toward an August 1 deadline for striking deals with trading partners, progress remains elusive. U.S. Treasury Secretary Scott Bessent recently announced plans to meet with his Chinese counterpart to discuss extending the negotiation timeline once again. Yet skepticism abounds about whether meaningful agreements can be reached at all. Trump seems desperate to make deals, notes Robert Pavlik, senior portfolio manager at Dakota Wealth, but U.S. trading partners resent being pushed into unfavorable terms. And this is the part most people miss. These dynamics aren't just about economics, they're deeply political too. Amidst this backdrop, gold has emerged as a safe haven asset, extending its rally against a weakening US dollar. Treasury yields also continued their downward trend, marking the third consecutive day of declines. For context, benchmark 10-year note yields dropped to 4.338%. Reflecting cautious sentiment among bond traders who appear hesitant to commit amid ongoing uncertainty. Corporate earnings provide a mixed picture. While nearly one-fifth of S&P 500 companies have reported second-quarter results so far, analysts now predict aggregate year-over-year earnings growth of 7%. That's a notable improvement over earlier estimates of 5.8%. However, cracks are beginning to show beneath the surface. Take General Motors, for instance. Its core profit plummeted by 32% due to hefty tariff-related costs that shaved $1.1 billion off its bottom line. Such examples underscore how the protracted trade war is starting to bite, not just figuratively but literally. Across the Atlantic, hopes for a breakthrough in U.S. EU trade talks seem increasingly distant. With Brussels preparing retaliatory measures labeled as anti-coercion, tensions between both sides threaten to escalate. Could this lead to a full-blown transatlantic trade conflict? Or will cooler heads prevail? These questions linger unanswered, adding another layer of complexity to an already fraught situation. Meanwhile, commodities like oil took a hit, with U.S. crude falling 1.56% to $66.15 per barrel and Brent crude dropping 1.37% to $68.26 per barrel. Demand concerns loomed large, exacerbated by fears over potential disruptions caused by unresolved trade disputes. Cryptocurrencies offered a rare bright spot, with Bitcoin climbing 1.82% to reach $119,134.52. Ethereum, however, fell 1.4% to $3,706.19, highlighting the unpredictable nature of digital assets even during turbulent times. So, what does all this mean for everyday investors trying to make sense of the madness? Is there light at the end of the tunnel? Or should we brace ourselves for more turbulence ahead? One thing is certain: navigating today's financial markets requires patience, resilience, and perhaps a dash of optimism. Do you think world leaders will find common ground before the clock runs out, or are we heading toward disaster? Share your thoughts in the comments below. Wall Street reacts to tariffs, GM slumps, RTX cuts profits. Tensions are high on Wall Street as tariffs and trade talks dominate the conversation, leaving investors on edge. Let's dive into the latest developments and see how major companies are faring amidst the uncertainty. The big picture. Wall Street experienced a mixed trading session on Tuesday, with significant losses for General Motors, GM, and a notable gain for Tesla. Investors are closely monitoring quarterly earnings reports and keeping a keen eye on U.S. trade negotiations. General Motors feels the heat. General Motors, GM, took a substantial hit, with shares plummeting nearly 7% after the company reported a $1 billion impact from tariffs on its quarterly earnings. This news has reignited concerns about the broader implications of U.S. President Donald Trump's global trade policies. Ford Motor Company, F, also felt the ripple effect, with its shares dropping almost 1%. But here's where it gets controversial. While some analysts argue that these tariffs are necessary to protect domestic industries, others believe they are doing more harm than good. What's your take on this? Tech stocks take a breather. Despite the recent rally driven by optimism around artificial intelligence, some big tech stocks faced a slight downturn. Meta Platforms, Meta, saw a 1.3% decline, and Microsoft MSFT dipped by 0.7%. This slight pullback comes as investors await key earnings reports from the Magnificent Seven tech giants. Aerospace and defense sector under pressure. Shares of RTX dropped 1.3% after the aerospace and defense conglomerate cut its 2025 profit forecast due to tariff costs, despite strong demand for its engines and aftermarket services. Lockheed Martin, LMT, also faced a significant setback, with shares tumbling 8% after reporting an 80% plunge in quarterly profit. Trade policy uncertainty looms large. U.S. trade policy remains a significant source of uncertainty for both investors and companies. With President Trump's August 1 deadline for trade agreements fast approaching, the stakes are high. U.S. Treasury Secretary Scott Bessent is set to meet his Chinese counterpart next week to discuss extending the August 12 tariff deadline on Chinese imports. However, other trade negotiations, such as those with India and the EU, appear to be stalled, adding to the uncertainty. Market performance. The S&P 500 inched up by 0.01%, closing at 6,306.28 points. The Nasdaq declined by 0.36%, ending at 20,898.66 points, while the Dow Jones Industrial Average rose by 0.23%, finishing at 44,425.88 points. Healthcare and real estate sectors led the gains, with healthcare up 1.46% and real estate rising 1.29%. Notable movers. Philip Morris, PM, experienced a sharp decline, with shares dropping 7.3% after reporting second quarter revenue below expectations. The disappointing performance of its ZY and nicotine pouches was a major factor in the sell-off. Earnings expectations. Analysts are projecting a 7% increase in earnings for S&P 500 companies in the second quarter, largely driven by strong performances from technology giants. However, mixed economic data has led traders to all but rule out an interest rate cut from the U.S. Federal Reserve at next week's policy meeting. The focus has now shifted to a potential rate reduction in September. And this is the part most people miss. While the market is currently in a holding pattern, the upcoming earnings reports and trade developments could significantly impact investor sentiment and market direction. Stay tuned for more updates as the situation unfolds. Your thoughts. What do you think about the impact of tariffs on major companies like GM and RTX? Do you believe the current trade policies are beneficial or detrimental to the economy? Share your thoughts in the comments below and let's discuss.